Okay, that should be that. Good evening, everyone. Hope you've had a good start to the year. Let me know if you can hear me, see my screen, all the good stuff. And then we'll get into it. I've clearly turned off log for max FUD. It's not for that. I mean, generally it makes no sense why... As in, it makes no difference to use log or linear in my case, given I'm using horizontal stuff, but just sometimes it makes the chart bigger and easier to get a sense of perspective, hence why I've turned the log off before I get all those questions. Will I save your bags? I don't know, Andy. It depends what your bags are. Unlikely, in general. Okay, cool. We've got enough people. First things first, thank you to FTX for supporting Technical Roundup for all this time. Go get the app. It's the best crypto mobile app on the market. Unbiased opinion, obviously. But go buy your family members some altcoins, some NFTs, and then buy them some more when they are down 50, 80, 90%. That's a pretty good way to make friends and strengthen bonds with your family members, so why not? But honestly, it is the best crypto mobile app on the market, so go get it if you haven't already. What cave are you living under? Yes, buy more NFTs, great. Cool, let's do the high time frame stuff as usual, and then we'll assess the case for a bounce or the bottom around this 40k area, outline where that bounce may take us, all that type of stuff. So, for the time being, on the quarterly, like basic eye test, right, is that the market has traded at resistance and has not yet traded at support, right? And a lot of the mid-40s, just eyeballing it, is the whole diddle in the middle, or rather don't diddle in the middle type of case, right? So if we take that to the monthly, where we can actually add some levels, we'll do the old-fashioned, where is it? Highest close resistance, range high, lowest close support, range low, and then the midpoint landing at around 46k. That's what we'll do, okay? So at the moment, in terms of eye test, where is the market? So it spent quite a while, about 4 weeks, at the midpoint, and just like, or similar to how you had a retest of resistance before move down to the mid-range, at the moment you found resistance at the mid-range, and your kind of eyeball logical target for that, I think, still has to be the range low, right? I mean, even if you don't take this price action as conclusive, given the monthly candle hasn't closed yet, just in terms of general trading, the market traded at the range high, very clean levels there. We know we've spent a month at the midpoint, and we could still spend some time there if the market wicks back up and tests this as resistance, which isn't unlikely. The only level which hasn't had any love or any time spent there in a while is the range low, right? So if to any degree your argument is that 2022 is going to be slower, we're going to range, the market's going to consolidate, yada yada, it's very hard to entertain a world in which case you A, believe the market's going to range, but B, believe that you're not going to trade 30,000s. Those two seem somewhat incompatible to me, right? Of course, there is a question of, well, it doesn't have to get there, and if it is going to get there, is it going to happen in a straight line, or kind of what's the path that's likely to take the market into the 30,000s, and that's what we're going to discuss. But for the time being, in terms of kind of monthly eye test analysis, we've had rather clear price action at the range high, that is to say, attempted breakout that wasn't accepted. We have some decent evidence of the price action at the midpoint, which, you know, the monthly close is to be seen, but at the moment on the weekly time frame, that does look like a breakdown. And so still, if you're kind of tallying up points, you know, failed range high breakout, then midpoint breakdown / acting as resistance and not bouncing there convincingly, like a lot of stuff is pointing towards, at some point during this year, trading in the 30,000 handle, okay? That's still the kind of very high time frame stuff. That could take months to develop, right? Like, there is obviously a world in which this kind of bottoms here and then bounces and then spends some time in mid-40s before making its way down there, or even an extreme example where it pushes all the way back up to the range high before getting to the range low. So this isn't like a time-based assumption. Just generally, you know, range high has been done, range midpoint's been done. The kind of glaring outlier is the range low. Does that mean it has to trade? No. But do I keep that in the back of my mind if the market starts drifting lower, losing levels, etc.? I mean, obviously, it's kind of the logical eye test target, right? So that's just some context to bear in mind. Let's look at the weekly and kind of see what's changed since the last time we spoke. So just a couple things. The first is that from the available, like two things stand out to me on the weekly. The first is that from the available evidence, it seems like the range midpoint has failed to act as support, or has broken down as support and is now resistance, right? The market spent basically a month consolidating there. Let me just make these lines a bit. I mean, the mid-range, you know where it is. The market basically spent a month consolidating at the range midpoint and then broke down, so that's gone from support to resistance. Now, of course, you always have to be aware there is a world in which case this portion we're trading in right now ends up being the deviation before a reclaim, but the point is that's a separate trade. Like what we have right now isn't this. So if that sets up, great, we've got some pretty clear upside targets, the mid-50s and the range high itself, but for the time being, we've got to kind of take the information that's given to us as it is and see that the market's traded lower. You've got a weak bounce at support, which basically moves sideways, and now you've got another shift lower, kind of continuation in the direction of the dominant trend. That's the first thing on the weekly time frame, is that mid is currently resistance, okay? The second point is that weekly market structure is broken. Now that's going to be maybe an unpopular opinion, but I generally use candle closes and not candle wicks as my market structure indicators. So taking that into account, if we remember what the bullish market structure argument looked like, it was essentially this is the low, high, higher low, higher high, and then as the market's dipping here, it had a chance to form some sort of higher low structure around this midpoint or in the mid-40s, etc. Now for my money, that bullish market structure scenario failed when the market made a lower low close through this lowest close here, right? So if that's our low, this is technically a lower low. Now the immediate assumption might be that, okay, well, weekly market structure is broken, take it straight to zero. That's not always the case. Like by definition, a lot of the time you've got lower highs and lower lows. So sometimes what the market will do is it will give you an overtly uncomfy / bearish close, like a breakdown, and then the next week is the one that actually rallies and makes you question all your assumptions, etc., before continuing in the direction of the dominant trend. So this isn't a breakdown signal in my system where I'm like, oh, weekly market structure's busted, time to market sell. It's not that at all. It's just a higher time frame bias that sets my expectations for if the market starts to rally. And those of you who are sharp or following along, that kind of tells you what my next premise is, which is that if we get this 40k rally higher, given the state of weekly market structure, I would expect that rally to find resistance basically in this pre-breakdown portion from, you know, mid-40s up to 50. If you want to be slightly tighter with it, we can just pretty much go back to using the old level that we had, which was this consolidation here. But in any case, if you want to be conservative from market structure point of view, any rallies into mid-40s / 50k is technically an area where a lower high is likely to form as far as market structure goes. And at that point, you've got the midpoint acting as resistance and also just this pre-breakdown structure. And those of you who followed the streams along for a while, you know that some of the best uptrend structures are impulse, consolidate, impulse, and then when the market comes back, that's your support. It works in a similar vein to the downside. We've got impulse, consolidate, impulse. If the market rallies back up to one of those bases, that's still like a technical pivot or resistance until proven otherwise. And I think you can carve a similar structure here, and it kind of meets the eye test as well. Down, sideways, down. That's going to be your level of resistance. I guess one final note to make on the weekly time frame. So again, just as a reminder of what I've said so far. Number one, the mid is resistance. Number two, weekly market structure appears to be broken, right? I'd say number three, there are untested weekly levels, and I'm probably going to die on this hill and miss out on the bottom 100%. But for my money, it ended up being an absolutely pivotal level on the way down or earlier in the market, and it's this pre-breakout consolidation between 32 and 38 40K here. You can see that it was narrowly missed on the September bottom. We haven't reached it yet either, and I do know that I am aware of a daily level that takes precedence, at least in the market size. It seems to be a bit higher up, closer to the 40K handle. I think it's at like 40.7. But for my money, just given that this is the range in which the market bottomed before it actually moved up, I still want to see some sort of test of this area. At the very least, it's upper boundary, if not the lower one, right? And I know I've drawn a big box here, but as with anything, you can just break it down into two larger or smaller, in this case, levels. The highest close as resistance, the lowest close as support, and then you've got a possible midpoint if you fancy it. So kind of one thing, you know, point 1, weekly mid-range is resistance, fine. Point 2, weekly market structure is broken, fine. That just gives you the expectation of resistance if the market rallies higher. But point 3, which is what's below us, I'm still acutely aware that, for my money at least, there's untested weekly structure below us as early as 38k, and if we look at what that looks like, especially with the low being put in at the moment, you've got a very kind of clean equal lows type of setup, which I could see turn into a bit of a, you know, weak push up, then you get the failed breakdown into the level itself before jetting higher. That's kind of a quick setup that jumps out on those premises. But that's kind of the weekly time frame in a nutshell. There is, of course, a world in which case my salty ass never gets this 38 to 32k range. The market bottoms at 40 again and does something amazing. But it's nice to just kind of be aware of what's below you and not to place really obvious invalidations at like double bottoms, double tops, whatever. So that's that. And for those wondering, that daily level, I think, comes from this highest close here. Yeah, no surprise. That's where that comes from. So it's some ways ahead of the weekly, but in any case, that's the origin of that structure there. And seeing a bounce from this level would be unsurprising, to say the least. I would say, though, we will talk about like the short-term price action in a moment. In terms of bounces, I think there's basically one area which stands out. If you're playing short-term bounces, in terms of eye test, obviously, the first trouble area is the most recent kind of breakdown, which is around 45, 46, just kind of the support before the breakdown. You've got the very inefficient move here, etc. I would also say just be aware of a slightly sneakier level. This support resistance flippy boy at around 44.8, 45k. If I'm trading counter trend, I will generally take profit at these slightly more ambiguous but closer areas rather than go for the obvious ones where I think the market has to trade to. Like, if I'm very much trading counter trend, I'm not going to ignore levels of resistance. So for my money, if there's a counter trend scalp or whatever, just bounce trade to be had, the first trouble area for it isn't the obvious mid-range consolidation, etc. at 47k. I would be cognizant of 45k as the first trouble area. I mean, ultimately, it doesn't matter. This isn't like the biggest difference in the world, but I know some of you should trade really short time frame rotations, and myself included from time to time. So just some insight there. My first resistance level isn't 47k. It's rather down, a bit closer, down at 45k. What haven't I said yet? Walt Winter says, are you going to get your 38, 39k level? I don't know is the answer. I'll see if what the market thinks. So we can add some. Well, we can just bring up my chart, to be honest. What am I doing? Where's my perp chart? BTC perp. There it is. You can kind of see what that looks like. Weekly level 38. Weekly mid range at 46, 47. And I haven't marked it yet, but the daily level, and I've got this double bottom ish thing as well. And the daily level comes all the way from this prior swing point at 40.6, 40.7. Now let's talk about the bounce today, right? And I know it doesn't look particularly inspiring looking at like this one candle in the context of all of this. Like, let's look at the bounce today, right? But one thing to note is that during the course of this move here, which doesn't look particularly impressive as we're looking at it now, I would argue that the main driving force in at least a lot of this downward pressure is that legacy markets have been getting battered, right? And we've seen even when legacy was stronger than it is now, and when crypto was at slightly higher prices, etc., generally we would capture very little of the upside moves that would happen in the S&P, etc., including the early January move, and we'd capture virtually all of the downside, and usually have a bigger move to mirror it as well. So S&P would dump, we'd dump harder, S&P would pump, we'd do fuck all. It just became one of those unpleasant, if you're a holder, whatever, correlations to get used to. I will say just off the bat, one thing to pay attention to, and this kind of links into the main point itself, is when you establish really clear relationships in markets, especially like positive correlations, like the one I've highlighted there, you usually get signal. I mean, yes, from trading them, if you have an edge or you're comfortable executing those. I think it's a bit tricky because you have to basically become an S&P trader, which I'm not. I question how much of an edge that really is. But more importantly, the signal. If you're not comfortable trading in correlations, a lot of the time you'll get signal when the correlation actually breaks, right? So imagine, just kind of in terms of eyeballing it, if this is BTC. Sorry, let's do it the other way around. This is SP, and this is BTC. Right? So you've got this, S&P down, Bitcoin down, S&P down, Bitcoin down, S&P down, Bitcoin down, and then once you get S&P down and then a very noticeable Bitcoin up, right? Or even kind of Bitcoin sideways, it's when the behavior shifts from this to this. That's when you want to start paying attention, because that's the first real sign of reversal. When one of these kind of long-standing, multi-leg correlations starts to show signs of breaking or diverging or whatever, a lot of the time you'll just have a lot of trading systems and automated strategies really entrenched in trading that correlation, including discretionary traders after all. So there's always a bit of a move to be had once the correlation actually weakens or breaks, and those guys who get far too confident trading this get blown out and carried out by this. So that's one of the arguments that's kind of floating around at the moment, that this Bitcoin move up happened while NASDAQ and S&P and basically risk baskets, whatever you want to call them, continue to dump. So maybe that's a very tentative / early sign of reversal. To be completely honest with you, I'm sympathetic towards that argument, but I'm unlikely personally to get a trade going in that regard. Now, maybe within this consolidation, something very compelling and bottomy forms and I change my mind and I have a setup, in which case I'll be comfortable taking it, because the basic premise would be 40k is a macro line in the sand for many. The correlation traders overextended themselves trying to dump it along with the S&P. Bitcoin found a bid. Those correlation traders need to be carried out, and that's going to be your bounce into 45 to whatever, 47k, right? That's the most bullish argument right now, and I'm fine with it. It makes sense. It's not unreasonable. But for me personally, if I want to fade this, I either need something a bit clearer than just one green 4-hour candle, or ideally, and this is probably close to the truth, I am so fucking stubborn about that weekly 32 to 38k level, especially the one closer to market, that if I was comfortable not trading it the first time, and allowing myself to be front run by the daily 40.7, I'm fine with that happening again. Because at the end of the day, on average, I lose money if I trade ahead of my high time frame levels. That's just a rule. So say I'm looking to short, if I've got a daily level here and a weekly level up here, what will often happen is it'll come up, show a bit of weakness, and I'll think, oh, maybe I should sell. It's going to be a daily resistance. And then as soon as I sell, the market does something like that, right? And in the same vein, a lot of the time, the same happens with high time frame support structures. This is, let's say, an H4 level, and this is, whatever, a daily level. It's the same type of impatience. The market trades into it and then maybe starts a bit of a bounce. And I'm like, oh, I know the daily level's nearby, but this looks decent. Maybe I should punt. And then, of course, what happens is it'll stop me out, go to the daily, ping off it immediately, and go to 1 zillion, right? So I generally, in terms of average outcomes, EV, whatever you want to call it, when I trade in front of my high time frame levels, it generally doesn't work well. So in this scenario, it's kind of like this. You've got daily at 40k, and then the weekly level is somewhere here. Of course, I have to entertain, just like happened in September or whenever that bottom is, that the daily level does its job and sends the market higher. Fine, but if I had to take that trade 100 times, on average, the outcome for me personally would be better to wait for the higher time frame level that's further from market than to trade at the slightly lower time frame level that's close to market. So I wasn't baited in by it in September, even though it worked. I have to, you know, tailor my trading to cater towards average outcomes and think about the next 10, 50, 100 trades, not just where the market is right now. So if someone said to me, do you think a bounce from 40-ish is reasonable? I would say absolutely. And if they said, do you have a setup there? I would say no. Personally, no. Does that make any sense? Also, leave a like on the video if you like the video, I guess. No, it doesn't make any sense, just buy. How about we just mute this guy? There we go. That was fun. Okay, I will also say, if we just kind of gloss over the trend following metrics, which I like to do from time to time, just like we had downside confluence when we were talking about, you know, up here, where are the moving average memes for like a larger move reversion trade? When the market was at 50, 60, we were talking about low 40s as our kind of reversal point or confluence, whatever. In the same vein, if you're going to make an argument for reversion from the 40s or wherever that may be, once again, the same logic is applicable, because just like we have our range midpoint, let me just add this shit. Just like we have the range midpoint at, come on, man, and weekly structure at 46 and 47, that's not a purely or solely technical level, because while we have the support resistance stuff here, there's also confluence in the form of our higher time frame moving average stuff as well. So just like when the market was up here, we had a bunch of low to mid 40s confluence for the mean reversion trade. As the market's floating around down here, it's that same pivot that's attractive for a similar trade, except this one is from the upside down and this is from the downside up. So in terms of pivots or take profit areas, whatever you want to call them, it's just sometimes nice to see that type of confluence emerge in the market. It's just when all those factors are stacked together, you'll know that the short-term traders are going to be looking at that, the higher time frame trend following guys, the technical guys, those kind of just in general make nice areas to trade when you've got a lot of eyeballs on it. So that's something to bear in mind as well. What else do I want to say? So we can do a quick kind of summary thing for BTC. Okay. Let's give this a go. BTC summary. Okay. Weekly market structure bearish. Lower low. High time frame range mid. Now resistance. 45, 47-ish. Plus lots of confluence there. MA memes. Legacy been throwing us around. Prob won't go down forever. 40k macro line in the sand. Not precise. Plus decent area for some sort of bounce. Nota bene, cred gonna cope because fixated on 32.38. Whether high time frame punt or short term rev, that's reversion, 30-ish, sorry, 40-ish wicks below permissible into mid 40-ish seems a reasonable bounce play. Good / best signal likely to come from continued decoupling from legacy, i.e. legacy tanks and crypto up / sideways. Honestly, nothing mega high conviction at the moment, but can see a case for a bounce-ish, though no. This is very long, I'm sorry. Let's just go through it very quickly. Now, if someone said, just like a friend messaged me on Discord, like Don, says, what do you think is going to happen? I could 100% get behind it. Oh, I think it's probably going to bounce from 40-ish, and I'm going to cope because I'm still waiting for 32 to 38. I can totally see that. But let's go over this anyway. Mate, where does this pen keep disappearing to? Okay. Bitcoin summary, weekly market structure bearish because we've had a lower low close on the weekly time frame. I don't expect everyone to agree with this if you use the wicks for market structure. I don't, and I think it works better that way, at least for me. But in any case, you know, it looks like a lower low across the board on the weekly, and that kind of sets the higher time frame appetite. Given the lower low, comes no surprise that came as a result of the weekly support failing. That's the weekly mid-range. We know all the moving average memes are there, which is kind of this third point. All the confluence, the pre-breakdown supply thing, all your TA shit. It's at mid-40s, okay? So any mid time frame, even short time frame to some extent, punts are probably going to have their take profit at the mid-40s as the first trouble area / market structure inflection point, yada, yada, yada. Now, in terms of drivers in the market, legacy has been throwing us around. So by that, I mean risk assets and stonks and indices going down, and crypto's been going down with them and down a lot harder. And those probably won't go down forever. Like, I know I'm not going to repeat my diatribe on interest rate hikes. The Twitter Spaces are now replayable, so you can just go listen to that at the beginning if you want. The TLDR version of that is the market knows that there are going to be rate hikes. Now it's just a question of to what extent is the rate of change foreseen / priced in. And that's a whole different discussion. And generally speaking, a lot of us aren't going to have edge trading macro stuff anyway. And even more colloquially, when crypto Twitter and all of us crypto freaks, as my father likes to call us, once we really start talking about macro, correlation, dollar index, etc., that tends to be the bottom for those things. I mean, that's just kind of like anecdotal evidence. But in any case, I'm comfortable arguing that we've got no fucking alpha trading that market. So as long as we keep the correlation machine going on, we're probably not going to trade amazingly as far as Bitcoin goes, right? Now 40k macro line in the sand and not precise. This bit is important. You know, if you say 40k is an accumulation area and the market goes to 37 and then to 50, and the question was, were you wrong? I mean, probably not, right? If it's an area where you're expecting the market to spend weeks or, you know, form a bottoming type of structure, as many are, you can't expect it to be perfect, right? So if you're going to argue 40 and you put your stop at 39,999, I think that's inherently unreasonable. So just bear in mind that that's a macro line in the sand for many participants, like a nice value area, etc. And I think that makes sense as a premise. And as a result, it's kind of decent area for some sort of bounce. It doesn't have to be trend reversing or amazing or the bounce that takes us to 60k, but in terms of the market not going down the straight line, 40-ish is a decent spot to make some sort of reversion bet. And this last point is obviously important. I'm probably going to cope because I'm fixated on 32 to 38. I still want to see the market trade in that weekly structure. So if this 40k reversal comes alive in the next week, you'll know because I'll be, you know, seething. I mean, I won't be, but it'll just be that same frustration of, fuck's sake, oh, is this weekly levels going to be tested? I still have some decently high conviction that it will, but, you know, a bounce from 40, it's not a fact of the market is not allowed to bounce until it tests my level at 32 to 38. Like, no one gives a fuck, right? It's just where I'm likely to execute as opposed to, or more so than any other area. Now, more to the trading side, whether it's a high time frame punt or a short-term reversion trade, 40-ish into mid-40-ish seems a reasonable bounce play. That just makes sense, right? It's essentially a punt from high time frame stuff, right? Which is that support thing, into mean reversion stuff. Mean rev stuff. and that's the midpoint, the, you know, all the moving average memes, etc., etc. This as an idea is pretty kind of bog standard, right? You buy the bottom of the range and hope it gets to the middle of the range. So it's a tale as old as time. Now, in terms of non-technical signals, as we kind of discussed, the legacy's been driving us mostly to the downside, so it makes sense to still look for it as a catalyst, even if it's one for reversal. In this case, what that would look like is a continued, and I say that in brackets because we've had like 1 4-hour green candle, and that's not exactly like amazing evidence of something that's been dragging us lower for weeks. But in any case, there's some tentative evidence of decoupling from legacy, and that would probably be a good bounce signal as far as these things go. And what it would look like is legacy going lower or continue to show weakness, and crypto diverging from that, you know, while legacy moves lower by either moving sideways or moving up. And that would be a marked change in the relationship, which has been legacy down and crypto just looks like this, right? So that's something to bear in mind. And again, more on the colloquial side with you guys. Nothing mega high conviction for me at the moment. It's not like I'm scrambling to buy here and thinking it's like one of those generational opportunities like it was when I bought whatever that was, 33k and 1800 ETH. It doesn't quite feel like that to me, but I could be wrong, obviously. But personally, just being upfront, nothing mega high conviction. I can see a case for a bounce-ish, although no setup for me personally, at least at the time of recording this. I'm going to nuke this in a sec, but let me know if that makes sense, and like the video, I guess, if you like the summaries. Okay, get rid of this. 3, 2, 1. Bring the market back. Okay. Also, can I just say it feels quite nice to be vindicated on the argument of the liquidation wick being filled in. I'm sure you remember we talked about it at great length before this breakdown, that there's no reason to rush into any trades or longs, especially because the bottoming process has historically, after these types of events, taken weeks, and there's very often been some sort of retest or spike or trading close to the liquidation wick. And we've kind of been banging our heads on that premise for weeks, and it's somewhat reassuring that the rules of the game haven't changed completely and that got filled in, essentially. So thank God for that, because otherwise I would have looked like an idiot insisting on something so virulently, and if the market just went straight to 100k. So you know, that's, I guess, something to bear in mind for future trades as well, right? Where is the quarterly base at? Did it get backwardated on the drop? Hold on. I should have been paying attention to this. Binance, 2%? Okay. Yeah, not surprised. Base is still crushed. Fine. Makes sense. What else is there? I'm sure a lot of you were expecting commentary about this large open interest build-up in stablecoin OI. As I spoke about it last live stream, it was kind of impervious to the upside move to 50k. It didn't puke, and it also spiked the liquidation wick and didn't really budge either. I don't really have a clear read on it, so I have to see what side it's sensitive to. And at the moment, it was very stubborn to the upside and similarly stubborn to the downside. Like this, on a relative basis, there isn't much of a shift to write home about. So the answer is I don't know, and at the moment, it doesn't really matter. So my argument on that hasn't changed, unfortunately. I'd love to sound really clever and tell you something, but I don't have anything like that. Okay, let's talk about ETH. Also, new watch list. We can go through it at the end of the stream. Let's go through ETH. I don't really like the quarterly and monthly charts for ETH, to be completely honest with you. I think the weekly is really good. So for me, for my money, the weekly is kind of at its market structure level. Like if this is the higher low, sort of, if this is our market structure breakdown, low, high, higher low, higher high, and then the question of a higher low, it's kind of that market structure level is being tested at the moment. So it's at the extreme / at the bottom of the range. So a bounce from that type of area wouldn't be terribly surprising. Now the reason I wouldn't marry a bounce is, for my money, ETH is currently below weekly support. Now that's below two levels, one of which is quite obvious and the other one is a bit more subtle. Now the obvious one is that, why is the market dumped off? Well, we had a multi-month breakout above this like triple top, but I think it goes back here as well. Actually, probably not. Whatever, this large 4K level, the market broke above it and then just bled for weeks and then puked and accelerated. So just immediate eye test. This ended up being a failed breakout / deviation, even though it was a very long and ugly one, and even, very cynically offered a final bounce before ultimately puking. What I will say is, as we've discussed a million times, if this is the big failed breakout, it's very unlikely you get a second failed breakout. So I think if the market trades back above 4K, closes the weekly above it, and is accepted, the chances that it accelerates to all-time high and beyond, pretty high. That's a good bullish continuation setup. So if you're not interested in kind of frolicking around following a range high breakdown, you could just say, you know what, if it gets really cheap, I'll buy some. But otherwise, if it's kind of diddling in this 3K, 4K type of area, it's the 4K high time frame reclaim that'll get me on board. And whatever happens here, I don't really care. I think that's a totally reasonable take, especially for those of you who are kind of moving slower in these markets. So first argument on the weekly time frame, 4K reclaim, because a second failed breakout is unlikely, it's much more likely to be a real breakout, and therefore 4K plus into 5K, and then whatever actual price discovery, new all-time high structure. I think that's a good weekly time frame trade. Okay. In terms of where we are right now, as I said, point number one, eye test, it's the bottom of the weekly range. So kind of fresh shorts, that's a pretty tough one to manage, because even if it bounces like a little bit at the extreme, you're already underwater. You're probably a bit late to the party at this exact. I mean, the risk reward isn't there, in my opinion. Now, in terms of levels, I do think it's below support. That may seem like a contradiction given what I've offered in the case of this weekly range low, but it's not this level that I think is super important, which is a relevant market structure level. But for me, from a support resistance point of view, it's actually this cluster that we've had in Technical Roundup that's a lot more significant to me. And it may not seem like it, but basically this is the impulse, consolidate, impulse, failed breakdown, which then led to the all-time high. So you've got some support resistance structure there, but more importantly, you had the failed breakdown before the all-time high taking place at the low to mid 3,000 handle. So once this trap played out, this should have been very strong support. And you can see it's kind of it closed below it, albeit not mega convincingly, but still below. And at the moment, it's being accepted below it as well. So in terms of weekly bias, I think if the market starts to rally, you've got resistance like quite close on ETH at around 3,500. We know that on up moves, it tends to move up a bit more than BTC, and, well, up until recently anyway, on down moves, it would move down a lot more than BTC. So if we get a counter trend rally during the course of this week, I'd expect it to pierce above the upper boundary here at 3,300. But ultimately, on a weekly closing basis, if this is going to act as resistance, this is the spot, right? Now, what does that look like? I mean, shorting here, not really a huge fan. I think there are better charts and just clearer structures. I think in terms of longs, right, if you get a strong weekly close back above the upper boundary, at that point you'll have this as the deviation and then acceptance above. There's probably a trade where you fill in most of this dumpy wick into either the last low pre-breakdown, or if we're being really cheeky with it, basically the 4K cluster here. But for the time being, in the interest of being conservative, this does look like a break of support. Any rallies into it are to be treated as retests of resistance, and only if the weekly closes back above it could you make an argument for this then being a failed breakdown and then having some space to rally towards 3.7 and maybe 4K at a stretch. So yeah, that's kind of ETH. I'm not really interested in shorting it here. I think even if you are bearish and looking for continuation, you'll probably make more money looking for better longs once the market capitulates or gets to those key levels, and B, there are probably better things to short than ETH. So that's not a setup because of those two things that's mega attractive to me. But on the long side, if this turns into like, oh, it looks so bad, like a breakdown, but it kind of creeps back above, there's probably a candle to be filled for a kind of short-term trade to the upside. And the bigger trade, or the continuation trade, is the 4K plus one. So there are a couple of counter trend longs potentially lining up, with the 3K reclaim, and the bigger picture, the 4K reclaim. But for the time being, because it's below these levels, I just have to assume there's a resistance and not do much with it. In terms of if the market keeps dumping, where does it go? I think this low gets taken out. That seems pretty likely to me. And the next cluster that I've got that's relevant is all the way down closer to 2K. So that's something to bear in mind as well. So the ETH summary would essentially be macro 4K reclaim, big good for strength. Double fake out, pretty unlikely. Currently, weekly closed below 3.2, 3.3K support. Market at range low MS support. Longs, weekly close above 3.2, 3.3 the box. Prob gives a bounce towards, where the fuck is that? Where's this low? Where would it actually bounce towards? What would my first trouble area be? I mean, realistically, yeah, 3 has to be 3.6K. I can't really ask for more than that. If it's counter trend, I mean, yeah. Towards 3.6K, 4K, mega best case. Short, meh, not interested. Weaker charts around, plus rather look for longs on other shit. For trades. 4K reclaim, big good. Weekly, yeah. Oh, I should mention for currently, if this / next week rallies into low mid 3K, presumed resistance bear retest until proven otherwise. Yeah. Okay. So that's the ETH picture, right? So macro is in the clearest one in terms of big levels and highest probability, I guess. The 4K reclaim is probably the best re-entry signal in terms of probability, even though it's the highest one. In terms of where the market is, right, as the highest one in terms of price / longest to wait, whatever you want to call it. In terms of where the market is currently, it closed below this mid to low 3K support, but it's also at the range low / market structure support. It's just, you know, if you want to play bounces from that area, fine, but you've got this resistance hanging above you. Accordingly, if this or next week rallies into that box that we drew, which seems to be broken, it's presumed to be resistance or bearish retest until proven otherwise. As a result, for longs, if this breakdown doesn't stick and that turns into a reclaim, there's probably a trade to be had from the reclaimed box into the pre-breakdown structure, or 4K in the best case. In terms of shorts, like, you know, you might think, well, hey, you argued that if this or next week rallies into low mid 3K, it's presumed resistance, so why not short it? And the reason is not interested because there are weaker charts around and I'd rather look for trades on other shit. So just because you have like a box or a line or a chart that says something's coming into resistance, given how correlated crypto still is across the board, that doesn't mean you have to sell that specific asset. If your premise is that the market's going to rally and then find weakness during the course of the week, you might argue that, yeah, well, Bitcoin and Ether at resistance, what really does look like a piece of shit for me to short, that I expect that'll dump more than Bitcoin and ETH as well. That's also something you can do. But generally, like, this isn't the type of super clear area within the validation where I'd want to sell it. So this low, you know, this 3K handle has trap potential to me when it comes to the downside. So I don't want to be caught on the wrong side of that personally. But that's more or less ETH. 4K plus is really clear. Reclaiming 3-ish is somewhat clear. In terms of downside stuff, it's less clear unless we get like a capitulation towards much lower stuff, if that makes sense. Does that make sense? Is this somewhat intelligible? I will say that the Bitcoin chart, I think, looks clearer than ETH, but generally it's still somewhat relatable. Hey, look, 21, 50 weekly. Maybe we got our bouncy boy, hey? Who knows? And yeah, again, just purely eye test in terms of where is resistance if the market starts to bounce. This cluster stands out to me. 3.4, 3.6, whatever. That seems to be a bit of an area, because you've got this prior high and then basically this pre-breakout range as well. So that seems to be, we kind of draw a line across the mean if we want to. Kind of like that, right? Mid 3K is the hot spot for those bouncers. What about else have I got? Sol is at weekly support. iTest says unless the market's full Goblin Town, you get some sort of bounce in the next week or two. I don't know to what. I mean, if you're being very technical about it, your target's going to be the midpoint. So from 130-ish to 150s would be appropriate. If this turns into like a strong reclaim, I can see that trade, to be honest. Right? We know that the market is at weekly structure here. You've got support, nuke. If it really springs from there, then you've got your setup risk defined and then some sort of target for it as well. Depending on how this portion goes, there might be some decent risk to reward on that, as well as probability, obviously. But yeah, this is weekly structure. If this turns into a risk-defined failed breakdown, there's probably a punt from 130s towards 150s. And just kind of eye test says if this isn't going to go down the straight line, 130-ish is the bounce spot for it. Because if not, if it doesn't even produce a counter trend bounce here, I think it's going straight to, I mean, 100 is the kind of psychological support, but structurally all the way back to 70 to 80, to be honest. So that's Solana. I guess the cringe summary is the do or die at 130, with the first trouble area being around 150. You can be conservative and say, 147, 148, but iTest says A to B type of thing if you get a range low reclaim. Other trendy altcoin things for Luna, I guess in a similar vein, right? If we're talking weekly structure, this is the first kind of trouble area or bounce spot for the weekly after 3 weeks down. And what is that? Like, that's down quite a bit, right? Yeah, like 40% off the highs. So playing bounces from 60-ish into... Well, you see, I'm really conservative. So for me, this bounce is already more or less played out from 60 to 75, right? As this is the resistance level. So this is slightly less clear / less attractive. If someone said, well, what would you think of bounce from support into the pre-breakdown level? I would say, okay, maybe. But it's not as clear or as compelling. My eye test says that the easy part of the trade is played out with support into resistance. But, if this is really strong, there's no reason it can't come back to retest its pre-breakdown structure. It's just slightly less clear to me. And on the AVAX side, you all know my feelings about AVAX. I've got weekly structure at 56 to 66, right? This cluster before the all-time high crazy run. And I really think that is the first high time frame support, and all of this stuff is generally uninteresting to me. So I can only start itching for bounces lower from here when it comes to high time frame structure type of stuff. Let's do that. It is year 2025. Credit's still marking the AVAX weekly cluster. I know, man. It's so bad, but you know, you gotta stand true to your principles. For Phantom, there's a really uncomfortable but probably relevant cluster here at around $2. Also a nice quote-unquote psychological level. So if you're going to get any bounce before the Goblin Town bounce, that's probably where it takes place. It's already done its job to some extent. But you can kind of very much see it's the bottom of the range at around $2. So that makes sense. If you want to play Hasaka tweet counter trend stuff, that's the spot for it. In terms of Nia, it's just less clear. It's still missing from. It hasn't tested the weekly structure for me. More a bottom of the range bounce going on type of thing. So again, this is one of those trades that appears to have already played out at 13. You can kind of see it bounce. This is kind of the expansion day from that level. So that seems to be gone / a bit late. Don't have anything interesting to say about one. And as for Atom, it kind of looks resistancy, but no high conviction on this. Yeah, this on lower time frames, this chart is pretty messy. I think Hasaka tweets are gonna be your gonna be a better guide here. I want to quickly touch on the new watch list. I mean, if any of this was helpful, leave a like on the video or leave a comment or whatever. Engage with us for algorithm purposes. We'd very much appreciate it. But I've kind of leaned out my watch list a little bit, or made it a bit more constructive. So I've got Coinbase and Bitfinex as my Bitcoin and ETH spot markets. Then I've got FTX and Bybit as my perp markets, and this just lets me quickly eyeball the price differences or the kind of premiums or lack thereof between spot and futures. Then as far as altcoins go, I've got Sol Luna AVAX, the kind of OG rotational stuff. I've got the new Hasaka basket of FOAN, of Phantom, Nia, One, and Atom. Boomer coins, because I want to see what happens when... Well, actually, this isn't as relevant. Boomer coins is just like old altcoins, which aren't dinosaur altcoins. So your Tezos, your Link, your Matic, FT, you've got some exchange coins here, Algo, etc. Dinosaur, very important if I want to see how frothy or shitty the market is when these boys start pumping. I've got Tron, Bitcoin Cash, Ethereum Classic, Zcash, Litecoin, XRP, and Cardano. I'm sure this last one will upset some people, but whatever. This is my dinosaur basket. DeFi 1.0, just to get a... You know, I mean, DeFi pumps have been exit pumps recently as well, to be honest. But Comp, Aave, Curve, YFI, Sushi, and Uni, unsurprisingly. Metaverse coins, Alice, Mana, Engine, Sand. I'm pretty sure Engine is a bit of a reach, but whatever. Meme coins, AMC, GME, Doge, and Sheeb. And then TradFi, which has been very relevant recently. Gold, oil, and then just a bunch of risk stuff. ARK, Qs, and the S&P 500. So that's kind of the watch list I'm working with at the moment. Don't know if that's interesting or relevant to anyone. EOS, yeah, I should put EOS on dinos, shouldn't I? Yeah, why not? Let's do it. Good shot. Polkadot, not interested. AXS is missing from Metaverse. Thing is, I was wondering whether to have like a GameFi category or not. So maybe I add AXS to Metaverse and don't have a GameFi category because there aren't enough tokens at the moment. Like non-complete shitcoin tokens. Why do you find gold still relevant? I just want to see what's going through Peter Schiff's head. ETC missing from Dino? No, it's not. It's right here. Don't gaslight me. Yeah, Litecoin is dinosaur, 100%. Come on, man. How does one make sections in a watch list? You right-click and you press Add Section. Oh, mate, I don't care about Dubai Expo. Come on, man. PYR, yeah, so it gets hacked again and goes down another 80%. That'll be a really good coin to shove my money into. How do I tie my shoes? Yeah. Anything else interesting to add? Mate, this guy's telling me Dino coins have amazing fundamentals. Come on, man. Please spare me. I sound ill. No, I feel fine now. Why isn't Ada in meme section? Good question. Guys, stop shilling me your altcoins that are down 80% and are garbage. I don't... You know, I find it hard enough to trade like Sol Luna AVAX. I'm not going to dive into your shitcoins. I'm sorry. Link? I mean, Link isn't Boomer. That's not bad, right? What about Ohm and rebase tokens? That whole narrative part of market structure went straight over my head, so I've left it. Just like I didn't start following the curve wars, so I left it as well. Why MA and not EMA? Because I don't use them actively for trading, and I don't think it makes a massive difference. It just gives me a bit of a trend following eye test for where stuff is at on higher time frames. But ultimately, let's say you're like losing a shit ton of money on your MA trading strategy. It's incredibly unlikely that you just like change it to EMA and then you're like, holy shit, I'm profitable now. That was the bane of all my issues. I don't think it makes a big difference in the grand scheme of things, you know. Cred, is it true that if your limit orders get front run, it's better to stay away from the trade? It really depends on context. Generally, if my limit orders barely miss, then I'll pull them, but that's not like a hard fixed rule. It depends, you know, what you're trading, where your orders are, etc., etc. But it's worth monitoring what happens to the market if your limit orders get missed. E-Gold? Come on, man. What year is it? People asking about Elon Dogecoin? Fuck me. Do you use options? No. We didn't cover YFI. Have I got anything to say about YFI? This chart just looks like the buybacks rescued it, and then it's going back to sideways forever. That's what this chart looks like. The narrative for a lot of these layer ones is that rich people have nothing better to do than play short-term rotations and altcoins. That's the real narrative. Am I easily annoyed? Absolutely not. Absolutely not. Are crypto futures trading rigged? I don't think so. Cred, how can you read OI clearly? Isn't OI one short and one long? Yes. So how can you say if shorts or longs are opening? Because when you're looking at open interest, it's about who's expanding their net positioning, right? So if I open one long, and that is met by, like, you know, one unit of longs, I guess, or long one BTC, and someone else opens a short of one BTC to match that, the open interest is 2 BTC on that contract. But generally speaking, when you look at open interest and how can you tell who's doing what, it's the impact that it has on price, and then you can also use funding to get a sense of who's being aggressive. Yeah, lots of people interested in BTC, open interest, yeah. What's the worst trade you've recovered from? Where was it? Where's the one where BitMEX went down in the summer? I'm trying to remember. And I played this bit well. It should be burned into my mind, but I've eaten shit before on BitMEX going down and I was like leveraged long and not hedged elsewhere. What does being aggressive mean? Like going more against spot prices? Yes. Cred, how do you journal briefly? I spam text in my Discord. Like, I've got a Discord server with just me, and I'll just spam a chart screenshot and then a bunch of text about what I'm thinking. Do you think it's harder to earn money in crypto now than in the past years? I mean, given we've just had like NFT season, it's really hard to argue that, and Dogecoin and a bunch of other stuff, and eternal alt season for like a year and a half, 2 years. I find it really hard to argue that it's been hard to make money in crypto. So no, it doesn't. At least up until recently, it doesn't. I don't think it's been harder to earn money now than in past years. But keeping it, different debate. How about you open interest in some females? Yeah. Why you use linear not log chart? Because it doesn't make a difference, and I just wanted to show the, it makes the range that I was depicting a bit clearer. Doesn't make a difference. This is quite a roller coaster, isn't it? Exchanges are rigged in favor of market makers! Exclamation mark. I don't think you know what you're saying. Yeah, trend lines change, but I don't use them, so it's fine. I don't use heat maps. I agree with Avi's take that, I mean, like, by definition, what you see in an order book is A, advertisements. It's off mostly not actual transacted volume, especially if it's far away from price. And B, it's like by definition, a stale screenshot, which will change as the market moves and shifts as well. Now, there are obviously exceptions to this, like idiosyncratic moments in the market where there are huge buy walls across all exchanges at inflection points, like the Bitfinex tops and bottoms, or the Bitfinex bottom and the Binance top seller, etc. You do get those kind of asynchronous moments, but for the overall, I don't read too much into order book activity day to day. Your streams are way better than Don. Just tell him that next time, please. What do you think of Arthur Hayes' recent article? Yeah, it was interesting. Best advice on how to survive trading in the market? I don't know, man. I've got a video on risk management. Maybe go watch that. Do you think SBFSZ know where our stop losses sit and take advantage of it? I think both of those billionaires have better things to do than trigger your 0.03 BTC stop on Cardano perpetual futures. You use Elliott Wave? Question mark? Yes, obviously, all the time. These questions are so bad. Is this the real CBS asking questions? There's no shot. I'm the only one who fanboys. Hold on. Can I even check? Go to channel. Fraud! I knew it wasn't him. Or is it? I have no idea. What do you say? How far away do you think we are from a more uncorrelated market with reference to ecosystems, L1 gaming subsections of crypto decoupled from BTC? I still need to see more evidence of that, especially when Bitcoin is looking weak. I think those arguments hold the most weight and are worth the most when the market generally has like a positive uptrendy backdrop to it. because then it makes sense to venture further out on the risk curve, and those things can just generally benefit from larger inflows versus outflows, especially if they're contingent on new users or some sort of Ponzi tokenomics working out that you can ignore when there's a bull market, etc., etc. So I think those narratives of decoupling and dispersion in the market are best equipped to materialize when the overall market is pretty strong. I think what we're seeing now is slightly more worrying, where you've seen weakness across the market, and then people doubling down on those bets. A lot of the time, people with vested interests, quite literally, saying that, oh, well, no bear market ever, because something will always pump, including my tokens where I'm locked up and can't sell. It's like, I don't know, man. And also, you have to consider that that thesis was massively disproven as early as April, when Bitcoin crashed. April, May, when Bitcoin crashed, all of that decoupled, decorrelated stuff got absolutely battered, even relative to Bitcoin, right? It disappeared. So now we're in January. The question is, has market structure changed so much since April, May, to the extent that stuff can just be completely decoupled, decorrelated now, even if Bitcoin stays weak? And I don't fucking know. I don't think so. I have not seen enough evidence of that anyway. How do you view current sentiment on CT? It doesn't matter. It doesn't matter. It depends who you follow. And even then, it's not necessarily indicative of the truth. If you want to look at actual sentiment, go look at funding. Funding and quarterly basis, as in the basis on quarterly futures. That's your real sentiment check. Like fear and greed index and all this stuff is dog shit, in my opinion. You guys have got to stop asking someone who draws boxes and horizontal lines on charts why I'm using log over linear or linear over log. It really makes no difference. You think the economy is going to crash in the next year or two? No. How do you interpret funding rates? I've got a full document on that somewhere. Let me try to find it. Oh yeah, here it is. Oh, apparently it doesn't exist. That tweet was deleted. What happened there? My account get deleted as well. Crypto cred open interest and funding. Is that going to come up? Maybe. Can't find it. I mean, someone I'm sure can find the notes on that somewhere. And I need to write up a guide eventually. I mean, I've shown this before. Where is it? I need to be careful not to open anything stupid. So Don and I started this January 2021, so almost exactly a year ago, and no progress since then. But maybe if the market goes to actually zero, we'll write this up and finish it. It's the introduction, types of futures, order types, leverage, liquidation, funding, open interest, cost of trading, hedging, and like a bunch of other stuff. And, you know, yeah. If the market literally goes to zero, we'll finish this, but yeah. The sacred documents. How much weight, in your opinion, do sites like ExoCharts, Trading Light, and Bookmap weigh? So there's a real big difference between those, which is that if you're looking at something like Exo, like an actual footprint, for the most part, you're looking for transacted volume, so real order flow where money has changed hands. If you're looking at like a Trading Light or Bookmap or other order book based stuff, you're looking at advertisements which are stale and change as the market changes and as price moves, etc. So my inclination, as someone who doesn't use this stuff a ton, but from speaking to people who are intelligent, is to put more weight to actual transacted volume. That is to say, the footprint and maybe market profile, but footprint being the clearest one in that analogy, more so than order book based advertisements, if you will, for price, or stale order flow as it's called. Yes, exactly. XO, market orders, trading line, limit orders, etc. Everyone asking questions about BTC in-depth volume analysis before they go and long another shitcoin based on tweet from their favorite influencer. Yeah, 100%. 100%. And also, I need to finish this at some point. No, not One Piece. Although I need to finish that as well. Where is it? Content. Look how far I've got in horizontal support and resistance updated. There you go. Amazing progress. The reason I'm not sure is because I was considering grouping together horizontal SR and market structure into one whole new video, but then I couldn't come to a decision, so I quit instead and just binned it, and I'll have to come back to this. But there's some amazing progress there. Let me actually find, while we're here, I do want to find the link to that open interest and funding Google Doc. Because it's actually not terrible, I think. Where are you? Hey, I found it, I think. Yes. Here it is. Let me link it in the chat. I've just linked the funding and open interest document based on a Twitter Spaces that I held where I talked to myself for an hour about this kind of stuff. It's not complete, it's not organized, yada yada, but there is a whole section on open interest and a whole section on funding, which is better than most of the stuff you'll find. So do you have plans to do a how to short video? No. Why do you disagree with Don on Tezos? Because I think it's a boomer coin and I didn't love the setup on it. And his setup was based on the BTC pair, which I pay very little attention to. How did you learn all of your experience of crypto you have today? Just by participating in the market? Making money, losing money? Waiting for Ubisoft to pull the... Yeah, 100%. 100%. What is your relationship with Don? Entirely physical. Entirely physical. Just pure hedonism. Nothing more. Is that even a word? Hedonism? It is, right? Hedonism. Yes. Yes, it is. Okay, good. Is it pronounced hedonism?
Hedonism.
Yes. Okay, good. Good to know. Just got to check these things from time to time. Is there a way to sell? Is there a way to tell if seller pressure is slowly down or exhausted? Depends what tools you're using, right? If it's a liquidation-driven move, when the liquidations stop, that's some decent evidence, although a lot of the time liquidations can be leading / trend forming. If you're doing volume analysis or order flow, if you see divergence on something like a CVD in a nice contextual area, that can be a good sign, or just general oscillator divergence from price as well to get sign of momentum diverging and sellers running out of coins in that regard. Shifts in market structure, a few different things. But a lot of the time for me, I don't entirely wait for the sellers to be done. I just think, I try to do business where there's an extreme and the spots at which they're most likely to run out of coins rather than they've run out of coins now long. If that makes sense. I don't take the confirmation entry per se. I take this is the extreme of the move with maximized risk to reward type of setups. I'm telling you, the only reason the market is bouncing is because out of principle, I'm not buying this daily level at 40.7, which is a fantastic level. So you all owe a massive debt to me for leaving all this money on the table by coping, and for a second time now, 4 months later, or whatever it is, waiting for sub 40 range to punt. So just because I'm doing that, you get all these free money bouncers from an obvious level, which I wrote about like back when it was being formed, like up here and all this other shit. So you're welcome. And just so you know, the second I buy this level, it's going to 0. So I need my protection money. I'm going to collect protection payments from you, not to buy this daily level. Are all of your jokes on Twitter 100% yours? No, I've got a very sophisticated, multinational, multi-time zone team coming up with hilarious things to say to cryptocurrency influencers. So there's at least 20 of us. There are at least 20 of us. Do you prefer spot or perp? Depends for what. Short-term trading, perp. Mega knife catchers, spot. Investments, spot. Tradeboy Cartier on Twitter was saying once he saw BitMEX 9 mil liquidations, he blindly market aped in. Why is that so? Is there any alpha behind this? I mean, there's probably alpha in outsized liquidations being mean reverting, but beyond that, I'm probably not the right person to ask. Who trades Bitcoin? Is it mostly retail traders? I mean, crypto is still mostly retail traders, to be honest with you. So I guess the answer is yes. But because Bitcoin's so big and it's becoming this macro asset and it's becoming more efficient, etc., you have slightly more. And, there aren't the same size constraints as there would be with lower to mid caps. How long is a short-term trade? Less than a day, I think. For me, at least. Do you leave perp open overnight? No. Why do you prefer perps for scalp? Because I can just trade the contract without having to own the coins. Depending on what coin it is, it can be more liquid than a spot order book for that asset. You get leverage as well on perps that you don't get on spot unless it's spot margin. A bunch of other stuff. Why is knife catching spot? If it's like a massive macro knife catch, then because I don't want to get liquidated. Or I don't want to introduce the risk of liquidation. And also from a trade management point of view, if I'm knife catching a big nuke or a high time frame level type of thing, I found that I have much stronger hands if it's a spot buy than if it's a futures trade with a bunch of P&L flashing in my face, where vol is at its most explosive. What do alts do during the bear market? Go through a bigger bear market. Any scenario it'll thrive without BTC and ETH? I think that's possible but unlikely. FTT levels, man, I've not heard about that coin for a long time. iTest says support. There you go. Do you still FOMO? Not really. Not in a long time. Not to stuff I'm used to trading anyway. Like, I'll FOMO the top of some NFTs or whatever, but not on stuff I have experience in. I don't really hedge insofar as, like, I'll take a short on my spot holdings or do whatever. I'll just sell into stable coins if I want to rebalance, to be honest. Do you open a trade every day? No, not recently. Let's get a sentiment check. Is the bottom in? At least some sort of interim low. Is this going to stick? Are we going to go up to like 43, 45, etc. from here? Is this some sort of bottom / low? Yes or no? Just straight up, yes or no? Bit of a mixed bag, huh? I think the yeses have it. Great, it's going to be another one where I don't get filled and the market just teleports, huh? Great. Cool, cool, cool. I'm fine with that. Totally fine. Not seething at all. I'm just going to delete this line. Fuck you, I just deleted your support. Where's your god now? Down only. CPI stuff this week? Yeah, yeah. Put it back. It's really Solana that has to bounce, if we're being honest, right? Because if it doesn't bounce, it's the classic technical analyzer meme. Below this level, it's lights out. Except it's literally true in this case. I think if 130-ish isn't some sort of interim bottom, it's actually lights out. But to be fair, the fucking lights are out at Solana half the day anyway with its network outages and all this other stuff. This is the real lights out chart, you know? Cordana is in a similar spot to Solana. Oh, is Coinbase getting battered? Ooh, yeah. That was fun. It's like the Coinbase IPO won't be the top. Got fucked. ETF is bullish. Got fucked. I mean, it has to stop. It has to stop. Hood IPO? Yeah, yeah. Oh yeah, I sold the day of the Coinbase IPO. That was like one of my best trades. I sold that and then bought 33k. It was the best rotation of the year, easily. I mean, I still underperformed by orders of magnitude the Sol Luna AVAX thing, but we just don't talk about it. We talk about the Bitcoin trades. Because this is Boomer TV with Boomer Cred as your host. And a very fitting co-host with Donald. Have you guys seen his fucking watch list? It's the most unreasonable thing I've ever seen in my life. He's got like fucking Request Network, Nano, I don't know, like his watch list, and it's all the BTC pairs from like fucking Poloniex and Bittrex. My man is stuck in a time capsule, I swear. It's mad. Ravencoin. Yeah, I know, it's actually mad. It's actually mad. He's like, do you guys want to look at some alts? It's like, not your fucking altcoins, mate. I don't want to look at your altcoins. Just stop stop the stream. I don't really care for plan B stock to flow stuff. Like, look, the upside is that dumb people think it's smart, and if that convinces them not to hold, sorry, to hold and not sell the bottom, that's great. The issue is anyone who kind of knows what they're talking about doesn't take that model seriously. And then the second point is if you make a case for 100k to 288k as your target, and the market trades to 40, 50k, and then you say that the model isn't invalidated, I can't take you seriously, and also it's clearly just not useful for trading or anything else. And then the final issue is you could still make a case that it's a net positive because people who are dumb enough to believe it will just hold and not sell. But the problem is, by definition, as we saw with parabolic trav in like 2018, etc., the most ardent model believers are the ones who will sell the bottom when it's that many kind of deviations away from what should be the baseline. So embracing that framework raises the likelihood of you being a bottom seller once you really think the model is broken, which tends to be at the bottom, right? So it's for those reasons I don't really give it a lot of mental bandwidth, and it's clear that there's no such thing as invalidation for this person. You can always come up with a new model, new explanation, and the people are so built into the cult and so fucking dumb at this point that they will just believe anything they're told, even if it makes no sense. So why would you ever expend any mind share on people like that? It's literally impossible to change his mind or his thesis to be invalidated. His followers are even dumber. They don't even know what they're agreeing with, but they'll just agree because it makes them feel good or made them hold, which made price go up, or at least made their net worth go up. It's probably one of the least productive corners of crypto ever. It's just pure fucking Scientology. I didn't think about that shit whatsoever. And there are clearly better ways of looking at the market for context and whatever else. Like, if you say 100k to 288k, it goes to 50, and you say my model is fine, then what the fuck are we even doing here? How's it even useful, you know? Yeah, exactly. They think it's like science or maths, and it's fucking quantitative, and it's truth, and all this other stuff. It's like, mate, it's worse than TA, to be honest. Like, shit. When is adding to a losing trade ever a good idea? Very rarely. Very rarely. Hey, Scientology is truth, don't insult my god, yeah. By the way, just in terms of some feedback, so we've been going on for an extra like 25 minutes, but I would say it's mostly been like a shit posting slash responding to comments 20-30 minutes. Is this actually fun slash productive, or has your brain switched off in the last 20-30 minutes? Like, is this worth doing in the future? I don't know, because it's very casual and there's not much content going on, but... Nice hearing someone else upset. It's not useful, but fun. Okay, that's how I feel about it. Yeah, roasting Don is so much fun. It's insane. What would happen if you only post losing trades on CT? I mean, it really depends. Some people love the loss porn if you're losing like a lot. But in general, you have to realize that on Twitter, you're seeing generally everyone's individualized wins and highlight reels, and it's happening all across different sectors of crypto as well. All the fucking scalpers are posting their best scalps. The investors are like recounting how they caught Sol Luna AVAX, and the NFT guys just minted something up 20x, and you're just sitting there down 6% on Tezos and thinking, what the fuck? How am I the only one losing money? So it's not super representative or helpful in that regard. So, approach it with some skepticism, that's for sure. What salary would you need to quit trading for a year? Why would I quit trading for a year? Also, it just depends what part of the world you live in and your dependence and quality of life, etc. Cred, is Sasaka just using us for exit liquidity? No, I don't think so. I really don't think so. S&P pumping, yeah, well. There are still people who believe AMC is going to $10,000. A lot of them. How much does FA play into your TA trades? It depends on the time frame of the trade, to be honest. If it's like a mid-term type of thing, which isn't just technically backed, like if the correlation between the downside correlation between the S&P and Bitcoin were to break, plus I get a technical setup for Bitcoin which is bullish, etc., I guess that plays a part. But it's only for like narrative building in the confluence sense, and not really much else. I mean, there are some scenarios where I think something's grossly oversold or not priced in or whatever, but that tends to be pretty rare. Like, I'm still a boomer, right? Most of my actual trading goes into Bitcoin, ETH, and then I'll buy the shitcoin of the day if the whole market nukes and I'm looking for a bigger bounce. That's really my bread and butter for the most of it. So maybe I'm not the best person to ask. How often do you and Don Alt meet in real life? We've met like 3 times, and the last time was 3 years ago or something, so not particularly often. Why not turn your tips and rules into a platform/dashboard to screen for good setups and better ensure you follow your rules? Why would I do that? And I don't think my system is as easy to systematize, if that makes any sense, or automate. It's very, very discretion heavy. So I'm not sure how easy that would be, to be completely honest with you. It's almost entirely discretion at this point. And it's not necessary, yeah, I don't think it is, to be honest. My watch list and the actual number of active assets I trade is pretty low overall, so... If you had 20k and want to trade in crypto, what would your best advice be? I mean, obviously not financial advice or whatever stuff, but with 20k, it depends what part of the world you're from as well. But I mean, you got to take more speculative bets, I think, further out on the risk curve and lower down the market cap count. Basically, buy some lottery tickets. The chances that you turn that 20k into something significant with like leverage trading, 40, 80, 100k positions, more than that, I don't like your odds of survival there. But buying some lottery tickets on like fucking Curve Wars or some mid caps or some NFT mints on fucking Solana or whatever else, I think that's probably where you can run something up, as opposed to trying to trade Bitcoin and ETH without much of an edge or experience, you know? I think if you've got a small account, staying away, like making ecosystem specific bets and all that type of stuff, lower down the market cap list and higher, you know, further out on the risk curve, and buying some lottery tickets in that regard is much better than trying to like scalp Bitcoin and ETH, you know? How do you decide/find what is coin flavor of the day a week? I mean, most of my trades will be in Bitcoin and ETH, so that's settled. Otherwise, I'll kind of just either look on Twitter or look at 24-hour volumes across exchanges and see what's chugging along. And a lot of the time, just narratively, it's pretty clear where people are looking. Like Atom recently, Foan before that, and Sol Luna AVAX. If you follow the right people, it becomes pretty abundant. Have a sack on notif? You mean, yeah. With all the macro, it makes total sense to have a sideways year. So I think yes, I will present the counter thesis to that, just to be aware. I don't think this is the likely one to happen, but you know, you always have to bear in mind what you being wrong would look like. So just to lay out the base case. The base case is that inflation isn't transitory. It's a result of the very loose monetary and fiscal policy that's been employed during pandemic times, and therefore we're going to quote-unquote pay for that spending in the form of higher inflation and, you know, all the distortions in the labor market that those have caused, etc. And we pay for that via higher inflation, and therefore to combat the higher inflation, interest rates are going to have to go up, and interest rates going up and, easy money coming to an end, less liquidity in the system equals risk assets getting hammered. That's kind of the base case of, rate hikes, number go down camp. Now, what would it look like if those people are wrong? Well, necessarily, it would mean that inflation was indeed transitory. And in terms of the things that are contributing to the higher than expected and, longevity-wise, longer than expected elevated inflation, you would have to subscribe to the argument that it's not fiscal, it's not monetary, but rather it's this asynchronous kind of supply chain disruption that is the cause of the shifts in the labor market and higher inflation that we're used to. And therefore, this year, as supply chain constraints ease, therefore that will have an unexpectedly positive impact on inflation, i.e. lowering it, which delays the interest rate raising scenarios, and therefore risk assets get a bit more breathing room, right? So that's the kind of macro counter argument for the prevailing hawkish Fed equals risk, rates up, which equals risk assets go down. The counter argument would be that inflation isn't primarily driven, or this higher inflation isn't primarily driven by monetary and fiscal, but rather it's supply chain, and it is in fact transitory, and it's going to come down, and that's going to delay rate hikes. So that's something to bear in mind as well. And I didn't even fully cover the labor market angle of it, but who the fuck cares? We're drawing lines on charts, aren't we? I still don't think it makes sense, even in the midterm, to be like super bearish equities. I mean, just fucking look at this thing. Right? How are you going to be bearish on this? Really? For any prolonged period of time? I don't know. I think a lot of people who missed out on this are expecting another one, and I just don't think that's how it works, And look how short-lived this was in relative terms as well. Like, that's really, yeah. I don't think we see this again. I'd be absolutely shocked. This is like one of the fucking craziest things that'll happen in our lifetimes, I think, when it comes to markets. Honestly. Fucking watched oil go to minus whatever it was. You can't expect that to happen on like a frequent basis, right? It's gonna bend backwards soon? Yeah, man. This is what it looks like. So TLDR for the stream, Bitcoin, ETH bounce, Cred sidelined and seething. But yeah, on a serious note, it's been fun hanging out. Make sure to leave a like on the video if you haven't already. Subscribe to the channel. If you want to jump back to, I don't know, like 10, 20 minutes into the stream, we did summaries for Bitcoin and ETH, which have my non-cynical views on those. So be sure to check those out. Also, subscribe to trletter.com. It's the free weekly newsletter that I write with the duck, which just got charts, levels, and stuff we agree on. So if you want the all killer, no filler type of approach, just the charts and the commentary, that's the one for you. Happy New Year to everyone. Let's make this a fun one. That's all from me for the time being. We might be getting the podcast back this Friday, which would be sick. We're going to see if Avi wants to come on from Block Tower to tell us that the bottom's in. That would be a fun one. But in any case, we'll try to get either a very good casual Friday or a podcast episode for the end of this week. That's all from me. This has been fun. Let's do this post analysis chat a bit more often, but for the time being, have an awesome week, and make sure to tell Don to update his watch list when he streams next, but don't tell him about my shit talking. All right, take care and see you next week, or yeah, whatever, later. Bye.